So let's look at this sell-off, and I just wanted to cover some more ways you can use the dual adaptive price bands. So right here is a sell signal. The faster bands have a quick cross above the slower bands. The bands together are in one indicator, and we have a cross to the downside. We had another cross to the downside right here. Now this was yesterday morning, yesterday afternoon, U.S. Central Time. This is U.S. Central Time, Chicago Globex time. Then this morning after news, or after 7:30, we had a cross to the downside here. Faster bands went outside, and I'll blow it up so you can see it better. Pre-market, we had selling, of course. We've been selling Asian session through EU session. We did have a cross to the upside there. Slight amount of lift. We came up. The bands just started barely touching the faster bands, touching the slower bands, and we had one little peak above it. So not a whole lot of bounce there. But we did get some sell side out of news, or after 7:32. This is the 7:32 time window. So about 1 minute later, we had a sell, and the market has been in selling. We came outside of the bands and then crossed back above here. Now, and I'm going to show you some uses for the bands. We came there, the market traded lower a bit, so it cycled a bit and down. So that if you got long there, that would have been a losing trade. That was a winner. That was a pretty decent trade. That was a pretty decent trade. So these type of trades, and I just want to show you too, the nice thing about the dual band setup is when you're in a big trend, the higher time, not the higher time frame, but the less responsive or the slower set of bands is basically pointing you exactly in the direction that the market's going. So what are some ways you can use that information to work setups, even if you don't have excursions of the faster bands outside? Well, you can change your time frame. I'm on one time frame. You could be looking at a bigger time frame like this, and then also have a lower time frame chart, like maybe a TQ bars 17 or 19 chart or 15 chart, where you're looking and catching more of the oscillating downtrend on the lift and rollover points. So you can have like an entry chart, and you can have the bigger picture chart. That's one approach. And I just want to show you some other ways that you can use these tools. So let me clean out the drawing. And in this entire area, since we've been in a downtrend, you can kind of see you get these excursion outside of the bands and hook, excursion outside of the bands and hook. But you can also see, the bands are obviously downtrending and actually increasing their downtrend. And that was late part of the day yesterday. So anytime you're getting any lift to the upper sort of the bands and you're getting a rotation on the faster set of bands, you can use those as quick scalping points. So you get some lift, then you get rotation on both sides of the faster bands, and you get in and take a shot, lift, rotation on both sets of the bands. So you got rotation here, take a shot. I mean, and I would say if you're going to be selling the market, you want to sell the mid-band area or above as far as your entry goes. If you get a short setup, but you're below mid-band, I would just leave it alone. So here in this upper area, so this is the slower set of bands. There's the mid channel on it, or mid-band, and here's the upper. We came up to the upper. This is pre-market. We rotated lower. So both the upper and lower portion of the faster set of bands are back in alignment with the upper bands. These are areas where you can look at to work scalp entries. That's one way. And then an easy way to do it is just, okay, run two charts. So maybe run a 17 to 19 TQ bars chart. And when you're getting there, you're going to get bigger excursions outside of your faster bands are going to get bigger excursions outside the slower bands. The nice thing is you can really fine tune it. So you can get on a time frame that you like that's lower for, I guess you could say your more actionable chart setup. And you can use another chart for kind of seeing what is the market doing from a broader perspective, if that makes sense. So you can have one chart, higher time frame look, one chart, lower time frame chart that you can use it for catching a lot of, you know, excursion outside the bands, back in, you hit it. Excursion outside the bands, back in, you hit it. Excursion outside the bands, back in, you hit it. You can see more of that cyclical excursion outside of the bands that are actionable on your lower time frame chart. So many ways to use the dual bands. Also, if you're just in some other trade and you're short, maybe through some other mechanism, if you're watching this, you see the bands, faster bands go outside and start hooking back in. Let's say you were short in this area price on a grid MA alert space trade. You're short up in here, and you see on your bands chart, we're going outside the bands and starting to lift. As it's crossing above, that can be utilized as an exit point too. So there's many different ways you can use the dual bands, not only for actionable trade setups, but you can use it to look at the market from a higher time frame perspective and use it as on a lower time frame for an actionable trade entry chart. And another thing just to realize, and one good thing about bands is you can always see where value is in the market. If the bands are going down, the slower bands, we'll call them the master bands and then the speed bands. So the master bands and the speed bands. If the master bands are going down and you're getting price anywhere up near the upper range, you're in an area where buyers, if somebody wants to keep buying the market, they're buying near retail. Buying this market that's downtrending, wholesale pricing to get into the market is on the lower side of the channel. So if somebody wants to be a buyer in the market for whatever reason, it doesn't make any sense for them to be a buyer up here in general, day after day. The value area in a market that's downtrending is in pullback areas, not in pumps away from the selling, kickbacks against a downtrend. So this is the value area to be a seller. This is the retail area to be a buyer. So if you're going to buy, you're getting ugly pricing to get into the market to the long side. Just like down here, if you want to be a seller in the market, you're paying retail to be a seller in the market when the market is in the bottom area of the channel. So it's kind of a running where is value look at the market. And it's reality. It's just like, hey, this is what price is doing. There's no ifs, ands, or buts about it. There's no second guessing it. It's showing you what price is doing. So from a value standpoint. So more ways you can use the dual adaptive price bands, more updates, more information out later today. It's Friday. All of you, I hope you have a great weekend ahead. And yeah, just wanted to cover the dual band setups. And wow, was that a sell-offs. That was that last push the other day, and it's been oscillating and now accelerating to the downside. So there you have it. info@gridalgo.com for any questions, but the dual adaptive price bands, methods of use, what it's telling you, and overview of what are the capabilities of the bands used in different ways. Have a great day. Talk to you later.